Thanks for joining me, Boris. I'm looking forward to this interview.
Yes, thank you. Appreciate you having me.
Of course. So I'd like to start with understanding your journey, the start of your career from, when you started to getting into crypto to your current role as the managing director at Tribe.
Yeah, of course. Let's see. So I was 5 years old when my family moved from Russia. Both my parents were engineers, and so I started coding super early. Was never that good at it, but my dad kept hammering away. And so I went to school in Amherst, Massachusetts for computer science, but quickly realized that I was getting lapped by the kids at school that had a pretty good curriculum. And so I had to figure out a way to like stay in the game. And what I figured out essentially was that people were building web applications at this time. This is like 2006, 2007, and it was really greenfield. You could build really simple things really quickly, and you could get it out to the market, and there just wasn't a lot of competition. And so I started building tools, some that I can't really talk about on a podcast, but just like goofy college kid stuff until I ran into my first co-founder, Jared. And what we built was essentially this thing called Campus Live, which was a homepage for college students. Very outdated these days, but the idea is basically you pull in like all food delivery, all classes, the Facebook API. For those that remember, you could like basically poke someone through a third-party app. It was funny, but pretty much in 2 weeks, all the kids made it their homepage. We ended up expanding to like 100 different schools. Went pretty viral. And I remember someone offered Jared and I like $1 million just to buy it. And I said, no way, we're going to raise venture capital. This is like the day of like everyone's looking up to Facebook and the crazy story. So we ended up raising money. And by the end, this is an 8-year journey. By the end, we would have probably made more money after giving up, I think, more than 50% of the company to VCs by just selling the thing for $1 million or $2 million. So very funny kind of full circle of 8 years. Could have been working at like Microsoft and probably done better, but it was a good learning experience. It was like my real college. And so after that, after we sold the company and had a little bit of an earnout, I started another company, again with Jared and a bunch of other folks. Company now called HQO, was called Venture App. I was the founding president. And between 2015 and 17, I basically ran sales, marketing, go to market for this company, which was in the prop tech space. Towards kind of like early 2017, I had started accumulating crypto personally. This was before that big gold rush that happened where everything went to like those local all-time highs. Went on all the forums and so forth and just got really into it and started paying more and more attention to what was happening in that space. And I've always had an interest in game theory and computer science and business. Crypto is those three things put together. And so in the middle of 2017, I went to the co-founders. I was like, this is not going to work. I love doing this. And I'm just in your way doing this other thing. By the way, that company, with me doing nothing more after I left in 2017, has gone on to be really successful, multiple hundreds of millions in market cap. Like they've done really well. And that's in spite of me being there, not because of me being there. But I actually went and started working crypto with a friend named Julian, who was also a founder in Boston. And we started this thing called Game Theory Group. And this was like the day of ICOs. I'm sure a lot of people listening to this can remember this. And we had some money, but nothing crazy. And so we do some of these initial coin offerings, honestly, as a way to figure out what the hell is wrong with them. Because I knew day one, like this cannot be the way that these protocols launch, because almost all of them were unfair launches. Almost all of them were pre-mined. Obviously, all of them were essentially on Ethereum. But it was an interesting learning experience. And so at the same time, we started a blog called Game Theory Group, where we would send our friends our thoughts on crypto. And we usually did it tongue in cheek. And that became moderately popular. Maybe a few thousand people read it. I've since taken it offline because some takes were spot on. Some I'm just like, can't believe I wrote that. But the point is, we went really deep down the rabbit hole. And then together in late 2018, we joined, basically we're acqui-hired by this group called Republic, which many folks listening to this probably have heard about. And Republic at the time had a big crowdfund presence. It had spun out of AngelList. And they wanted to launch a venture group, which is what we did for them. We essentially launched the RIA, which could take in qualified clients, put them into SPVs or into funds. And then at the same time, my friend Andrew Durgee and some of his sort of co-founders launched Republic Crypto, which is pretty well known today as
Mm.
sort of a consulting group, economics group that helps stand up protocols. So that was sort of my first major formal foray into crypto. And at Republic Capital, which is what it ended up being called, we ended up deploying hundreds of millions across protocols, north of 100 crypto investments alongside non-crypto investments, grew the team from the two of us to 23, and I was there until mid 22. So that was kind of the origin story.
Yeah. Very, very interesting. It's great to hear the founder background and then kind of reconnecting with your studies and coming back into crypto, right, on the CS side. Very cool. I think I've definitely heard of Republic. I'm sure others have as well. And then more recently, I think over the past few years, you joined Tribe. So tell me about that move and I guess a little bit more about what Tribe does. I understand they're a generalist tech fund, but are doing a lot more in crypto. I guess would also like to understand the crypto thesis that Tribe has.
Yeah, sure. So, doing the work at Republic was definitely a crash course in all different parts of the crypto ecosystem, all the way through from like centralized entities and exchanges, all the way through to like the most degen protocols you can imagine. The smallest check we wrote was 50K. The biggest I think we wrote was 40 million. So we went across the gamut. When I was sort of wrapping up my time at Republic Capital, I was thinking about the venture industry more broadly, like what did I want to do next? And one of the challenges that I saw in venture was that most funds were still doing the things they were doing 10 or 20 years ago, which is like words you'll hear, pattern matching, gut feel. Like a lot of it was the art and the science was just kind of catching up. And there were plenty of people that were fantastic at it. I mean, there are any number of VCs that are repeatedly really, really good. And I think a lot of them have an intuition for founders. And so they're good at seed, maybe even getting into Series A. But once these companies start getting a lot of data, like a lot of revenue, and call it like in the millions of revenue, many millions, or a ton of users, it starts to become more challenging how you break apart their data. And when I did the landscape of what venture firms were out there, one of the ones that I had already been very familiar with because we were LPs from Republic is Tribe. And Tribe really is what we call a quantitative investment firm. We take data very seriously. It's the core of almost everything that we do, macro and micro. The team is comprised of engineering and data science to a large extent. And it's really seen as the North Star for how we make investment decisions, but not the only way. And I really feel that the entire world is sort of pivoting. OpenAI and all the other AI LLMs have sort of opened the door to people, regular people, sort of understanding how important this collection of data is to then make decisions. That's how the AIs make decisions, right? Unique data sets, they synthesize them, and then through various methodologies can actually kind of figure out what to say next. In a way, that's kind of what Tribe's been doing for a long time without necessarily the big, large language models, which we are starting to incorporate. And so I did feel like data and the insights from that data is going to push the venture industry forward. And that's what I wanted to do. So I joined Tribe in 22, initially to team up with the crypto group and help lead that. Our crypto fund's about 100 million. We now have a second fund, but the first fund that I joined is just under 100. We were somewhat deployed, so we had an awesome portfolio. And my job really was to synthesize what we already had and build on it and create the thesis for, last year, this year, and so forth. So that's what happened at Tribe. The core of our thinking at Tribe Crypto is this. We want to be early in the process of these decentralized protocols. So we focus almost exclusively on the crypto side on decentralized, or call it decentralizing protocols, because they rarely start decentralized for any number of reasons we can talk about. And the idea is we want to be early, so call it seed. And then we want to continue to participate into the Series A's or the private rounds and beyond. And the way that we do that is by synthesizing the data. We eat a ton of on-chain data using Flipside Crypto, QuickNode, a bunch of other platforms. We've built our own framework, and we synthesize that data and we create this 50-page report. And maybe, I can send you one, you can flash it on the screen. But basically the idea is we eat up all this data. We're already investors. And this is what informs us whether or not we should buy, sell, hold, support, introduce, whatever. And that data component is really important, not always at the investing side, because some of these protocols will be before testnet, but very much through testnet, mainnet, full launch, and the data in terms of usage and revenue and fees that happens after the fact. And so our focus is on those protocols, and we really are focusing on the protocols that can generate meaningful fees. And right now, we believe a lot of that sits in the infrastructure middleware layer. And on the consumer front, call it like front ends, we have done those investments, but we really do feel like in order for us to get comfortable, we need to get comfortable with the regulatory aspect of a front end that plugs into a global user base.
Yep.
And I think some of those questions are still unanswered. So I'll pause for.
Yep. No, very interesting. And I guess like as you said, you're focusing on projects that are going down the path of decentralization. How do you think about, investing in equity versus tokens then?
Yeah, I'll answer a question you didn't ask first, and then I'm going to get to that one.
Yeah.
So maybe with Bitcoin or Ethereum or a very small number of what we'll call fair-ish kind of fair launches, the reason that I think you could claim or attempt to be a decentralized protocol right away was because crypto was just not that popular, and there weren't as many people trying to Sybil, game theory, or just straight up hack your network. And so you could go through this period of like, hey, we're sort of decentralized, sort of not, but like we want to be decentralized right away. Let the community run it. Like the community in crypto has a mercenary angle to it. And so without the proper things in place, it's really hard to just do an Ethereum-like release. That's my take. And so what we typically advise founders is, yes, you want to get to what we would call properly decentralized, which is different for every type of sector, right? Different from an L0, a base chain, a layer 2, or a game, right? Like very different needs on decentralization and trust. So that's going to take much more time these days. You have to be much more resistant to the outside forces. That's one. In terms of investing in equity and tokens, my belief, and we wrote a research paper on this, is that most of the value in things that need to eventually be decentralized will be in the token as the unit of account. Like it is ultimately what people will be able to own, what people will want to own. And if the protocol is properly designed in some measure, whether through validators or nodes, or maybe in some regions, direct distributions to tokens, that's where the value will accrue. Now, the problem is we're nowhere near there yet, right? Like even decentralized protocols have a centralized treasury, right? Where often many of the fees will accrue, especially true for exchanges and perps protocols that are ostensibly on chain, but only give up some of their fees through, like GLP or whatever you're talking about, some of the perps platforms. So we're not there yet, but I think that the ultimate goal ought to be that the holders of the token can, if they choose, benefit from inflation or fees. Yep. And that's where the industry is clearly going with what you're seeing with Ethereum and everything else. So that's my take of where the value is. Where we actually write checks, yeah, most of them have an equity component that over time means less and less.
Okay. No, it definitely makes sense. And interested to hear your opinion on the value of airdrops.
Yeah. So look, it depends on what you're going for. Airdrops are a very easy way to grow your social media account, grow your Discord, get people to get or want the token. They're a pretty bad way for people to hold it. Retention rates are extremely bad with some very rare exceptions. And part of it is because a lot of projects don't think about the post-airdrop marketing nearly as much as they should. This time is different type of thing. And then the other part of it is like, look, it's a bunch of people that want to make some money. I mean, you can't imagine 60,000 people in the period of 2 weeks all of a sudden care about you so much. So from a marketing perspective, like a shock marketing thing, I think it's fantastic. From retention and usage, I think it's very much up in the air. There are some solutions. So one of the companies that I'm a board member on or observer on is Flipside Crypto, an investment we made at both Republic and Tribe. And what they offer is this opportunity to earn tokens through an airdrop-like situation, but you earn the tokens through doing these things they call challenges, which means if you're an engineer, you do some engineering solutions, data science, like you learn about it, you get interested in it, you understand why it's important, you create something. And I think people want to create something and they feel more attached to it. And you can see just in the numbers that Flipside shows is if you do it that way, you get a lot more retention by, I think it's an order of magnitude. That's where I think airdrops need to go. They need to become more creative, more long-term. The hard part is that in a bull market, airdrops tend to really help the launch of a token. And so people will keep doing them. It's a distribution mechanism, and it's to build your future distribution arm. People really need to think about the post airdrop component. And I hope we have various different iterations of this, even this cycle, Because I think if we don't, you're going to see pretty big sell-offs in these new tokens pretty quickly.
Yep. No, that makes a lot of sense. I think flip side is probably similar to a company that I was a small angel in called Layer 3, where you essentially do a bunch of activities and you get
Yep.
rewarded tokens. And I think that's a way better way of doing, incentivized kind of rewards, which I think is quite cool. And I guess like coming into like, there's a lot of conversation, the excitement around an upcoming bull market. A lot of people kind of are asking me what is the potential narrative for this type of, this coming bull run? And I'm interested to hear what your opinion on that is.
I was talking to a very smart investor friend of mine yesterday, and what he said really echoed with me, which is we have to move away from narratives, because narrative-driven bull runs go up big and down big and really have very little staying power. And so I hope we move to products and fees and revenue. So if you ask me for my narrative, it would be generate fees, generate revenue, and make people want to pay them. That is the only narrative that will give crypto staying power. So I'm okay with the speculative premiums. Like, I get it. You don't know how big something can become. Retail has access. Retail wants to participate. All of that is fine. I'm not commenting on valuations. What I am commenting on is these protocols must find a way to deliver value to either token holders or a centralized entity, whatever it is that they've structured. And I can't think of a better value driver than someone being willing to pay for your product. That's it. And so when I look at protocols more broadly, even the major-based chains, like Ethereum generates meaningful revenue, right? Solana does too, but it's so inexpensive, it kind of is its own Achilles heel, right? But then all these other L2s and L1s, I think just getting cheaper and cheaper and faster and leaving a ton of empty blocks, it's just like, it's really diminishing returns. We really have to go back to what do people need, or what do we think they will need, and what will people pay for? And that to me has to be the narrative for this cycle. We're not there yet. It's not the narrative right now. Right now, the narrative, I don't know, it shifts every few weeks. Modularity, right? And we believe in that. Like, I get it. We're big investors in Eclipse. We're big investors in Lava, a bunch of other modular plays. And I think modularity is a way to drive revenue to multiple streams and accrue value. So it's super interesting to me. But these things are going to change over time.
Yep, I think that's an interesting point. And I think going into where you're seeing value for your investments in Tribe, investing over the next kind of year, you mentioned modularity. Is there other areas that you're looking at when it comes to investing?
Yeah, so I'll make it really easy if a founder ends up listening to this. We tend to invest in places that can be, or in protocols that can become the hub for other people to build on top of. And I think the reason that we do that is we recognize that a protocol that's fully on chain, fully decentralized, at the end of the day, it's only as valuable as people that leverage it to generate some sort of fee and or pay a fee back to it. And so to me, building one application front end, you've seen this time and time again. People use it for a while, they get excited, but then for whatever reason, they move on to the next thing. To keep people coming back, you need to build a feedback loop that says, I used your tool, it had great documentation, good structure, very stable, and we're going to build on it, and then the next person will build on it, and the next person will build on it, and it's going to continue to accrue value. And so it's very important for us for you to either have a developer marketing plan or for you to be intrinsically built for devs. It's okay if you also have built your own star product. So like, let's say you're building a L1 and you built your own exchange on it. That's fine. I mean, that makes sense. You're eating your own dog food. But at the end of the day, you have to be able to attract developers. And there's only so many protocols that are going to be able to do that because they're all sort of fighting for the same group. So the other part of it is if you can attract new developer teams, either you're abstracting away the crypto element or you're abstracting away something else that brings non-Web3 or crypto devs into the ecosystem, that's really interesting to us. The third component is, at least now, we're looking for people that understand two things. The game that's being played now, which has a lot to do with your sort of like V3 crypto ecosystem, right? Devs, market makers, exchanges, whatever. They understand where value sits and how to get it in the now. And then we're looking for founders that can look around the corner and basically say, like, is this really how it's going to be the whole time? This sort of pre-baked marketplace. I don't think so. The smartest founders don't think so. And they're trying to look around the corner to be like, what will be the pillars of the ecosystem in 25, 26, 27? I'm telling you, it's not going to look like this for regulatory reasons, for liquidity reasons, for regional reasons. There's going to be like lots of change. And
Mm.
people that can paint us a picture of what the world will look like in 18, 24, 36 months, that to me is most interesting. And you hear all kinds of different visions, which is why I'm doing this in the first place.
Yep, yep. Okay. No, that's a good point. And stepping a little bit back to, Tribe more generally, Tribe does some interesting things like incubations and launching products like Termina. Interested to hear what the thinking around that is for a venture fund.
In many ways, Tribe is a data company with a venture product, not a venture product with a data arm.
Right.
So like when we think about what we're good at collecting data. We know how to do that, both from private and public sources, the techniques, the people, the relationships, the automation, all of that. So like we can get a lot of data. And we've built internal algorithms and frameworks and actual software to be able to analyze them quickly, faster than anyone else. And I'm talking both on-chain and off-chain data. Okay, so we're a product shop. We can build stuff. We've incubated many things in the past. Termina, for those that don't know, is our data product. It's the one that can eat in private data, synthesize it, benchmark it against every other company or protocol that we've ever looked at, and within a day or so create the 60-page report across any metric you can think about, just like LTV, CAC, cohort analysis, revenue saturation, everything mapped against everything else. The advantage that gives an investor is basically you can see how well this company is doing, not just in and of itself, but compared to its peers in various sectors and stages. And so we felt two things. One is we need data that not just Tribe is collecting. Like we want data in aggregate form from other people in the ecosystem.
Right.
And two, we felt that with the advent of some of these AI tools that made things a lot cheaper, a lot of other people would see what we're doing and basically want to catch up. They would want to build their own tools. And so by spinning out Termina as an incubation, we achieved two things. One is we're able to hire the best engineers that work for equity. And they tend not to work for carry or salary. Like they want the dream. And two, we're able to plug in, if our customers in Termina agree to it, data sources from them, and they can get data sources from us. And that combination of both data sharing, it's opt-in, and the ability to hire the best people is why we spun out Termina in the first place. So now we, just in the last 4 months, we've run more of these 8 balls. These are the data analyses than we ever have before. They're way higher quality. I mean, again, you can flash this on the screen, the dashboard of Termina. It's incredible. Yep. And we're hiring the best people. So it really has achieved what we wanted it to achieve. And we recognize it's unique for a fund to take its special sauce and basically open it up to the world. But we feel like it'll raise the bar for everyone. But mostly it will make us the center of the private data investing universe.
Gotcha. That makes a lot of sense. And I think, am I right to say Nibiru was incubation as well? How did that kind of play out?
Yeah, so Nibiru actually was a real learning experience. I actually started working on Nibiru at the same time as I joined Tribe. It was my first major project here. And, I think a few lessons. One is we absolutely know what we're doing when it comes to incubation. We know how to connect the key stakeholders. We can help raise money. We can obviously deploy capital. I think the key learning is the engineers that we brought around the table at Nibiru were amazing, and we should have probably let them run without us even faster. And so we've really taken a lot of this feedback in, and we've decided, like, this is what we're good at. We can surround an incubation with all of the go-to-market and strategic and data support that we can. But the most important thing for an incubation for us is the engineering and product base. We cannot recreate that. We don't intend to recreate that. And the goal is that we partner up with those folks and we can be supportive while also letting them do their thing. Because at the core, the best founders are the ones that are product and engineering led. And they partner up with either co-founders or an incubation like ours to drive forward their go-to-market. So I expect Nibiru to be a huge success, partially in spite of us, partially because of us. Yeah. And it's been a huge learning experience. And now we have a number of other not yet announced protocols in our incubator.
Very interesting. And so you mentioned, at Republic, you were initially an investor in Tribe, and I know you have some experience on the LP side. What is like general advice that you would give to to a new venture manager who's considering raising a fund in this coming market?
Sure. So I've been raising money in some form or another since I was 20. I'm 37 now. Started raising LP capital in like 2017. So I'm not, full on veteran, but I can tell you the state of affairs. In the last few years, up until roughly first quarter 22, raising capital was pretty easy because interest rates were low. Venture returns on paper, especially, were fantastic. There were a lot of IPOs. Crypto was in a bull market. People really felt like they were going to give you money and make money, no problem. Someone always investing at a higher price. The world has changed, and it's going to stay changed for some time in spite of this crypto bull market. I think investors, both in crypto funds and venture funds broadly right now, are now really doing the comparison work of risk reward and time value. So when you put money into a crypto fund or a venture fund, 3, 4, 5, 7, 10, 12, 14 years later, you might be getting distributions. Okay. So who wants to make those kind of investments? Well, institutions have to, but they might be overweight. Many pensions and endowments are overweight. And the way they basically get overweight, right, is if the private values don't go down, and that's up to the manager. The manager has to mark these things down, right?
Yep.
While publics do all of a sudden go down, all of a sudden what you're seeing is they feel like they're really underweight public. So they're picking that side up, and the privates stay high, all of a sudden they're overweight. Now, publics, the majors have gone up, and privates have started to come down. So now you have a little bit more room, and I think they're open to managers. However, if you're an emerging manager, like going to an endowment, going to a pension is really hard. I mean, it's doable, no question. A lot of them have an emerging manager program, but the relationship is long. Like it takes, I think, 6 months, 12 months, 18 months, continuous updates, continuous meetings, really hitting what they're looking for, nail on the head, for you to get into that program and then start to figure out, are you one of the 7 or 8 VCs they're going to pick? And of those, maybe 6 are platforms they're going to stick with no matter what if they can get in, like a Sequoia or whatever. Yep. So now you have like 1 or 2 slots, right? What are the other options? Family offices, spooked. The ones that got into crypto, many got burnt. They're coming back. It's a little scarier for them. And then the ultra high net worths who can make a decision on a dime, but they tend to write 6-figure checks. So everywhere you look, there's a challenge. One is to realize the challenge is different. How to deal with an ultra high net worth or maybe a single family office that's still like the principal is making the decisions is different from how you deal with a CIO based person who, is not always paid to take maximum risk. A lot of them are paid just to like maintain the legacy. And then institutions who have to deploy, but have all the options in the world because everyone wants to pitch them. So you have to come up with a different game plan for each type of group. And you have to be really transparent. You have to have an absolute edge. You have to have an edge. Ours is data, but that doesn't have to be your edge. It can be anything. And then C, you have to think about what you can do in addition to just deploying capital. Is it a co-invest program? Are you going to bring them to the things that are important to them? It's different for everyone. What can you do to provide access to something in addition to over time returns? That's for emerging managers, right? Like you really have to showcase yourself to be different. And I would also say don't get discouraged. It's very rare with institutional or family offices. Your first meeting, you walk out with a check in 2024. It's just not going to happen like that. But I also feel like what you can see, and this has happened to Tribe, like you start getting a lot of no's and no's and no's and no's, and you stay with them, you keep updating them, and all of a sudden they see something, and your win-loss flips, and now you know all of them. You know all the people, you've made the relationships, you go back and you start winning all the deals. And that's really when things start to kick off for you. So yeah, and I myself am LP in a number of managers, and I think you got to use your network hardcore. Ask them for referrals, ask them for references. People tend to trust people they worked with for a long time. So there's my advice.
Yep. No, thank you for that. That's some great advice. And coming to the end of my questions, to start with, I'm keen to understand a secret obsession of yours that not many people know about.
A secret obsession that not many people know about. Okay. So I have 2 little girls, and so I don't have a lot of time after work, which also goes on for a long time. At 9:30 p.m., 2, sometimes 3 days a week, I jump on Call of Duty with usually 3 other guys and get absolutely roasted by 11-year-olds. And I have been doing this since COVID started. I have not improved at all. And you can tell from my like kill death ratio in Call of Duty. And yet I still do it 2 or 3 days a week. And I thought initially it was about the game, but I think it's a way to like reconnect and hang out with your friends.
Yeah.
And my wife told me that, and I was like, that can't be it. That's not why I'm doing it. I'm doing it for the game. And she's like, you might be worse now than you were when you started. So I love doing it, and I stay up quite late for that and get less sleep, but it's worth it.
Love it. Love it. And finally, what's your most recent publicly announced investment and why did you make it?
So we've had a bunch of announcements just in the last few days. I'll just pick one out of a hat. Blueprint is building this protocol called Concrete. And essentially what they do is liquidation protection. You pay a little bit into a pool of LPs that generate fees from that. And then if you're getting close to being liquidated or margin called, they have a few different implementations. This thing can save your butt. The reason that I liked it at a very macro level was that in the last cycle, deleveraging happened very quickly, right? The Terra component, the FTX component. And I feel like for both retail and institutional, the trading stack needs to be hardened. And you need to have tools at your disposal for sophisticated and unsophisticated traders to protect you and stop the on-chain, primarily here, deleveraging of assets. Because off-chain, it was mostly scams and frauds. On-chain, it degraded fairly gracefully, right? Like it did what it was supposed to do.
Yep.
What my hope is what these guys can make it do things better and safer. And I think that's important to the longevity of both people's balance sheets and also the crypto ecosystem in general. So check it out. Concrete XYZ, I think, is the Twitter handle. But we also just announced investments in Grass, which is built by Wind, in Lava, which is a modular play, in Analog. So we're pretty active.
Great. No, thank you for that. Those are definitely interesting ones. I've seen the announcements. I'll share the links to that in our notes as well. But yeah, thank you for joining, Boris. I thought this was a very insightful conversation and great to hear your advice around new fund managers as well as your thoughts on crypto right now.
Cool. Yeah. Thanks for having me. Really enjoyed it. I appreciate great questions.